Michael, what scares you the most about bail-in and how it's sweeping the world, and what role do you think Bitcoin can play in this ever-changing and risky financial system?
Yeah, it's an awesome question, and it's really just about understanding, stepping back and seeing that all these changes that are happening in Australia, it's not just Australia, it's all of the G20 and other countries around the world. And it's basically a step-by-step process of getting to a point where literally the banks can just help themselves to money if they get into trouble, or if their government gets into trouble, or if an international bank gets into trouble, or if the Bank of International Settlements just turns around and says, hey, we've got a crisis, we're going to dip into everyone's bank account. So one of the solutions is just having a certain amount of your assets that can't be confiscated. So whether that's in real property, whether it's real estate or gold, obviously cryptocurrencies is a great one. And even just a tiny proportion of your assets allocated to something that can't be confiscated, that you can actually control, is probably going to pay dividends. And when you talk about people in the developed world, a lot of them, it takes a little bit of time to get used to. But if you speak to people about this in Venezuela, Argentina, Greece, Cyprus, what we'll talk about later, they don't need to understand, they already get it. It's really just about implementation. And I suppose it's just about realizing that there's a game being played, and whether you realize it or not, you're part of that game. So prepare accordingly.
So guys, we've got all this and more. This is a fascinating interview, and it's on an extremely important topic here with Michael White of New Brighton Capital. This is definitely one you don't want to miss, so stick around. So welcome back, guys. Thanks for tuning in. Look, this has been a long-awaited interview. Myself and Michael, we've been talking for quite a while now.
Yeah.
And Bitcoins and SMSFs and pension funds and the global financial system as a whole, and how bail-in is becoming more and more of an important topic is something I've personally been looking into for a little while, and the subject matter around it is truly fascinating, and we're going to dive right into that today. So, Michael, I just want to say thanks for coming on to the show.
Yeah, thanks for having me.
Why don't you tell us a little bit about yourself? Tell us a little bit about New Brighton Capital and how you got into Bitcoin.
Yeah, sure. So I found Bitcoin in early 2013, just after the Cyprus situation. So for viewers who don't remember, there was basically a situation where the banks just went in and took, if you had a certain amount of money, the banks just took 40% of anything that you had, and to get themselves out of strife. And that caused a little bit of few ripples around the financial markets. Cyprus isn't a massive part on the global scale of things, but the fact that it happened is a pretty big deal. And at the time I was trading Forex in Miami with a couple of guys. I was working with some fund managers in Australia and in the UK as well. And I was sending money all over the place, spending a bit of time in South America as well. And I would be constantly getting my bank account shut down if I was overseas, because they wouldn't believe that it was actually me because I was moving around so much. It was an absolute nightmare. And then one day I found Bitcoin and something clicked. I went into my own cave and just went, like so many people, they go down the rabbit hole, they come back a week later without any sleep, and they're just like, I understand, something brand new. And it was really crystal clear. And I went to all these guys that I was working with, and they were all very successful in their own parts of finance. And I told them about it, and they just didn't want to hear it, whether they just thought it was a scam, or they didn't want to put their reputation to it because it was considered quite dicey, or for all these other reasons. And I basically threw everything that I was doing. I said, no, this is going to change the world. Pretty much been full-time Bitcoiner ever since. Started writing a few articles, ended up being head of sales for Bitcoin.com for a little bit, and then started New Brighton Capital.
So you've been around in the space for a while, clearly. How has it evolved? Because it was interesting, some of the things you mentioned there about how, you went to these experts in their fields in finance. I feel like that is still happening today. So like how has the industry matured since you got involved, and are you still seeing some of the same signs as when you first got in?
Well, last year it was all, blockchain, not Bitcoin. Right, and they still just don't get it. I think a really good example is someone like Peter Schiff. So Peter Schiff is kind of like one of the big naysayers with Bitcoin, but he's actually a really smart guy, and everything that he talks about, I actually agree with him, except when it comes into cryptocurrency. It's almost as if, you know, there's this cognitive dissonance that he just can't make that final leap. Like, he agrees that it's bullshit that, you know, with fiat systems and the governments and, you know, the way the global financial system is run, he thinks, you know, gold is the answer, but there's just some leap. I don't know whether he'll wake up in the middle of the night and just go, oh, I get it now, but it's amazing listening to people like that talk, where they're just saying everything in favor of cryptocurrencies and they're not being able to make that certain step, you know. But either the penny will drop for them or they won't, and those that don't, they'll get left behind.
And that's one of the most fascinating things, I think, is what I've found, and it's certainly what happened to me. You mentioned the rabbit hole earlier, is that for some reason, crypto with some people, it just clicks, and they're the ones that give up everything to dive headfirst into this. And even after I did that, and even today in my journey, I'm still learning about crypto and Bitcoin. I think one of the most valuable moments in my own journey was starting to get into Austrian economics and learning about the foundations of money.
Yeah, for sure.
Which I think a lot of people still don't get is the role money plays in getting into sovereignty, self-sovereignty, economic sovereignty, hardness, and how Bitcoin kind of takes all these Austrian properties of what is money and just puts it on steroids. What's your kind of thought process around that and Bitcoin, the role it plays, and how will that, I guess, tie into the financial system as this world evolves?
I think you're exactly right. And this isn't some kind of new, obviously the technology is new, but the ideas are definitely not new. So I'd highly recommend any of you, if you're not already, get any book by Ludwig von Mises or Murray Rothbard, and they talk about this stuff. And every single thing that they talk about, it just makes sense. And they take you through this little journey of the things that the governments do that are, you know, just silly and just add zero value, and how it all cascades and multiplies, and, you know, then things crash and we have to build up again. Like, there's nothing new about the theory about what's going on here, but obviously the tech is what's really exciting. And definitely read about some of these old school guys. You'll come away with such a crystal clear, big picture understanding of the fact that there's no version of the future where this technology doesn't fundamentally underpin how the world is going to store and transfer value. So that's kind of like a big picture thing, kind of a big statement, but I don't see any other version of the future that doesn't happen. And that's, if you have that kind of, it's not really confidence, it's just, I suppose, an understanding, maybe wrong, who knows, but things fall into place when you just absorb all this information. And that's what makes sense to me, and I can't see any other way. If there is another way, please show me. I spend a lot of time every day. Like, every day I look into the worst case scenarios of what the bad people are saying. It's horrible because it's all the same rubbish. You know, really the same things that they talk about fall into two main categories. So the two biggest naysayers we can say, I suppose, in the public spotlight would be Warren Buffett and Jamie Dimon from JP Morgan. And Buffett still gets his emails printed off and handed to him, right? So he just doesn't. He was never a part of any of the technological booms that we've had, you know, for the last 30, 50 years.
Well, they missed the tech boom, didn't they?
Yeah, exactly.
Berkshire Hathaway.
He's a value investor, so it's a different kind of thing. But just his understanding, he really came from the school of understanding how an economy works in regards to governments working with the economy. And if you have a look at the holdings of Berkshire Hathaway, over 50% of Berkshire Hathaway are kind of like financial services stocks. So like Wells Fargo is a good one. And so very similar to JP Morgan, Dimon has a vested interest in obviously saying no, because if the new thing comes in, well, obviously they're going to lose their job. So it's very hard to convince someone of something new when their livelihood depends on it. But he's recently just come around, hasn't he?
Well, you know, and here's the thing, kind of flipping back to foundations of money a bit as well, I find myself very lucky and grateful that I found prominent figures in crypto like Trace Mayer, who's an Austrian economist, who was originally very bullish on gold.
Yep.
And then Trace having such a solid foundation in economics under Mises and Rothbard, Bitcoin to him was instantaneously this uber golden. And really, once you get into this, it like you said, and I couldn't agree more, the only thing that makes sense in the future from a hardness, soundness perspective, which historically societies go to in times of economic duress, it is a natural evolution of society. Once money starts becoming soft and we have dilution of the currency, this happens. It has happened before. Bitcoin is the only thing that works in modern society. It is the only thing that works because we've all got mobile devices and the internet, right? So fascinating, but we could talk about that for hours and hours. Tell me a bit about New Brighton Capital. Tell me a bit about what you've been doing in the space and how the last couple of years has been.
Yeah, sure. So New Brighton Capital was born out of the troubles that I had because I wanted to buy cryptocurrencies within my own superannuation, and it was a massive pain in the butt. So it was expensive, it was slow, the accountants didn't know what they were doing anyway. So I kind of pieced together a bit of a solution for myself and my family, and it worked. And I had a couple of mates that said, hey, can you do it for me? And obviously it snowballed from there. So we've been going up, it's almost a couple of years now, going really well. But basically the essence of what we do is help people become the fund manager of their own superannuation. And whether you want to hold crypto, precious metals, legacy financial, like just the normal stock market, whatever you want, we can help put that together for you in a way that makes sense for you. So as long as you're comfortable making the investment decisions, we can help you with everything else.
So a lot of people might think that, or might even be surprised that with a self-managed super, you have so much more flexibility over what you can do. And they might also think people are crazy as well for buying Bitcoin in the super. I was buying Bitcoin in my super back in 2017, and saw as a long-term store of value huge potential. But I don't want to touch too much on my journey. How have you kind of found, I guess, your clientele, and I guess to expand on that, why do you think super is a good place for Bitcoin, and how does that mesh together in terms of like a long-term philosophy with that money and when people can actually access it as well?
Yeah, sure. So even though we're talking specifically about the Australian version of looking after your own retirement savings, what we're talking about is relevant wherever you are in the world. So if you're in the States, they've got a self-directed IRA, which is the same thing. If you're in the UK, they've got a SIPP, which is the same thing. So wherever you are in the world, find out what is the entity or the structure that you need to be able to control your own kind of pension or retirement or whatever you call it. And pretty much the concepts are the same. Okay. So once you kind of become a bit of a fan of cryptocurrencies, it's pretty hard not to be a bit of a die-hard maniac. You know what I mean? And obviously you want to take everything with a grain of salt and be responsible with what you're doing. But when the biggest obstacle that people have, what we find in regards to introducing this concept to people is letting them know that it is actually an option for you. Like, number one, you can actually do it. Most people don't even realize that they can actually own cryptocurrencies or other assets within their own super, or be the fund manager for their own super. So that's step number one, and it's a big one. And then once people do realize that, the two biggest hurdles I think people think in regards to self-managed super funds, specifically in Australia, that they think it's either too time-consuming or complicated, or too expensive. And our goal at New Brighton Capital is to dissolve those issues. We really have streamlined the whole process. It really is quite basic. We've got written and video instructions on every single step that you do. We're always available to speak. Either you can book in a time, chat on the phone or on the internet. You're not dealing with anyone overseas. You're either speaking to me or one of the team. And it really just makes that uncertainty just a lot more smoother process. And once really everything is set up, the only difference between, for example, you making investments within your own name or under the SMSF is just the name at the top. So obviously there are some rules in regards to what you can and can't do, but they're pretty black and white. And again, if you're unsure of anything you're doing, we're here behind the scenes, and we're happy to help out. That's what we're here for.
So I'd really like to get now into why someone might do this. So from my own journey, once I started getting into bail-in laws that have been kind of a global phenomenon that's been permeating the Western world, that was really, for me, one of the big triggers that I wanted to have increased exposure to Bitcoin purely from the monetary sovereignty perspective, because having control over those assets in the event that something like this happened, and as I'm sure you'll cover, this has happened in recent times and many times in the past in relation to gold, but more recent times, that was one of the big triggers for me. Why don't you tell us a little bit about what bail-in actually is and some of the context around that, and what the events are that have transpired in the world?
Yeah, sure. So bail-in basically means that the banks will use your money to get themselves out of trouble instead of going to the government to get a bailout and have the government pay the debts of the bank to save the bank. So this is something that isn't very new, but there's a new stream of it. Obviously, since the global financial crisis, there was massive bailouts. And a couple of years after that, there were G20 meetings, one in 2013 and there was one in Brisbane here in 2014. And what they were doing was the Bank of International Settlements, this is an international body, they wanted to get a set of standards and procedures and legislation that would literally make the banks not have to be bailed out by the governments in the past, so that the banks can actually tap into the consumer's money to get themselves into strife. And obviously that's a little bit shocking, but even without any of this legislation, when you make a deposit into a bank, it's no longer your money. You actually give the right, the ownership of that money over to the bank, and then all you are is just a number in a ledger. So there are a few rules that have happened that have come into Australian legislation since the global financial crisis, and this will give a little bit of context on the trajectory of where these rules are actually going and what it actually means. So after the financial crisis in 2012, there was a change in Australian banking law. So before 2012, if you had $1 million in an Australian bank, Australian deposit taking institution, that was actually guaranteed by the government. So if the bank went under, you'd get your money back, the government would pay you. So after 2012, you were no longer guaranteed for up to $1 million, you were guaranteed for up to $250,000, which doesn't seem too bad because most people don't have that amount of money in the bank. Even small businesses do have that, but that's fine. The problem is that there was a small print in that rule which said if a bank goes under, there's a certain amount that if the liability hits a certain amount, it voids everything and no one gets any money. All right? So that amount was $20 billion, and $20 billion per financial institution. But that financial institution includes all the subsidiaries. So if you've got Commonwealth Bank, you've also got Bank West and Colonial. If you've got Westpac, you've got Bank of Melbourne and St George. So it would filter down, and that the $20 billion would count for all the deposits within those entities. And $20 billion seems like a lot of money, but not when you understand that there's $2.8 trillion kept in Australian banks, and 80% of that is kept in the Big Four. So you're looking at maybe 1 in 50, 1 in 40, 1 in 30 if the banks lose 1/30 of what they're doing, well then you're done.
So interesting, you're talking about these Big Four banks. What percentages of Australian super funds would have cash or assets controlled by one of those banks?
Pretty much all of them. What a lot of people don't understand is not only do they have deposits there, the banks actually own most of the superannuation companies. So
Really?
you kind of you've got a triple risk going on there. So, and the legislation that went through, so not only have we got this $250,000 guarantee, which is actually worth nothing, because if I can assure you, if one bank goes down, probably all going down, yeah? And if one bank goes down, you can be sure that it's going to be more than $20 billion that they're going to lose. So literally, these promises are literally not worth anything. And it's fine to sit back and say, yeah, you know what, but we're pretty safe in Australia. And to a large extent, we really are. When you compare to a lot of other places around the world, even now in Venezuela, a lot of things going on. But we're really, you can't be complacent and think that it's not going to happen to us, because it can be very, very close to what's going on. So if we have a look about the trajectory of these rules changes that have taken place, it's not just Australia, obviously. This G20 meeting where they said we want to be able to have bail-ins, Canada already locked in with yes, we can take the deposits if we get into trouble. New Zealand are already locked in. Yes, they can take deposits. And the big issue here is it's not just if one bank gets into trouble. What this Bank of International Settlements Agreement allows is for anyone in the line of things to make a demand on this cash. So, for example, if the bank fails, the bank can take the money. If the government fails, the bank can go into if the bank fails, the government can go into the bank to take the money. If an overseas bank fails, like Deutsche Bank, for example, with trillions of dollars on there, or maybe quadrillions of dollars in derivatives, if they go under, they can just turn to the Bank of International Settlements and say, hey, we're in a bit of strife here. We need to call a financial emergency. Oh, no worries. With a stroke of a pen, pretty much every bank in the G20, which includes us, our deposits can be gone overnight.
And that is truly staggering, and is even far more than what I knew. And this has happened before. So tell us about what's happened in Cyprus and Greece only really a few years ago.
Yeah, so in Cyprus, I think it was 2013. So there was a banking crisis. You can probably remember they've got the pigs. So there was Portugal, Italy, Greece, and Spain that were all kind of in a bit of strife. And Cyprus jumped into that, and basically it was a situation where the government wouldn't give the banks any of them enough money to bail themselves out, so they literally just dove in and used the money of depositors. So if you had over a certain amount of money, they took a certain percentage. It was a small percentage, think about 40%. They just took that money. Now, it's important to understand that this is across the board, and if you've got, if the limit is say $20,000 or $40,000, and it's only a little bit above that, well, most small businesses have a lot more than that. Most pension funds, individual retirement accounts have a lot more than that. Mum and dad investors, or mum and dad, the small guy who's been saving all their life, who have their little term deposit, well, this is the money that's being taken.
And correct me if I'm wrong, Mike, but I actually looked into and wrote about what happened in Cyprus. And there were two major banks. There was the Bank of Cyprus and there was a bank called Laiki, if I'm pronouncing that correctly. Now those that had their deposits taken from the Bank of Cyprus were issued shares once the Cypriot government combined Laiki and the Bank of Cyprus. They were issued new shares. Over the long term, they were okay if they held onto those shares because they actually, over the years, the economy recovered enough and they were able to liquidate those. However, those with the bank with Laiki got nothing. In fact, I even looked into, there were clients of the bank that took, I believe it was Laiki to an international court to take legal action against these deposits being sealed, and the court just struck the case down. It didn't even make it to the court. So these people with Laiki got nothing in return, but the people that were with the Bank of Cyprus were lucky at the time to actually get shares, and maybe that was even a move to calm down the population a little bit when this happened. I don't know.
Yeah, well, it's important to understand that the banks aren't really part of a capitalist system. Banks really are very intertwined with the government. If banking was a free society, like a capitalist structure, then money would be a good that's provided by the public. Let the market decide. So you've got a situation. So if we were just talking about making bread, and the only people that could control and make the bread were the government, would say that's bullshit. That's for communists. Well, how about half of every transaction that's going on in the world? Because half of a transaction is money, and that money is the supply is determined by the government. So to think that you can deal in a legal system and kind of win when these banks are really in cahoots with the government it's a bit of a lost cause. But again, it's just about understanding the game that you're playing, and preparing yourself accordingly.
So with all that's going on, with bail-ins being passed across the globe, with previous examples like what's happened in Cyprus and examples in Greece as well, what do we have to protect us? What avenues do we have to over the long term both encourage a low time preference with this money, and also what is there that could prevent banks from seizing it?
Well, it really, I suppose, comes down to just the good old-fashioned advice that your mum or dad used to say: just don't put your eggs in one basket. A lot of people don't understand is having all your money in the bank is one basket, and it's not as safe as people think. So even just having a small proportion of your assets in something like cryptocurrencies that does have a potential to obviously have outsized returns, well, that could be the difference between you actually being fine and you really not being fine.
And how, like, what kind of liberty does owning cryptocurrency, just in general, provide the individual?
Well, it's self-sovereignty. You know, you own your money, unconfiscatable, borderless transactions, like all this kind of stuff that we know about. And it kind of comes into the fact, okay, well, why cryptocurrency or Bitcoin in particular? And I suppose to kind of dive into coming back to the idea that, you know, there's no other version of the future. And if there is, you know, again, let me know, but this is what I see happening. So basically we've got a global situation, and there are different parts to the global market. So basically you've got the top end of town, you've got the top end of the market with the institutions and, you know, the uber wealthy. You've got the bottom end of the market with the third world, and you've got people in the middle, you know, like most of the population in the developed world. So to think about what's actually happening on the top end of town, one of the main reasons why people, institutions and the super wealthy are going to be starting to take a little bit of a position in something like cryptocurrency. Obviously Bitcoin's the main one that they'll probably get their feet wet to start off with, is the fact that it's really hard to diversify a portfolio at the moment. So if you're managing money, let's say you've got two people and you've got one, they both make about 5% over market, which would be a good result. One person gets the result by having massive swings and getting up to there, and the other one has a nice little smooth trajectory to get there. The guy with the smooth trajectory who's going to raise more money, he's a better fund manager. And he's going to be sought out. And the people who, you know, the clients of this guy are going to leave that guy to go to the guy that has smoother returns. And the way that you achieve smooth returns has to do with not putting all your eggs in one basket and diversifying. The reason it's so hard to diversify in global financial markets at the moment, because the world's markets are so laden full of debt, the entire, like the global financial markets are pretty much at the mercy of the finance sector. So when finance goes well, the world goes well. If finance goes well, the world doesn't go so well. This didn't always be the case. You used to have, you know, ebbs and flows of different industries and different sectors performing, but now because there's so much debt, they all move together. And when you're a fund manager, when you need diversity, and when the whole market is moving together anyway, it's really hard to get those different assets that perform differently so that you can get that smooth amount of return. So the beauty about something like Bitcoin specifically is that it really is not correlated with the market. So it is a perfect hedge. And the fact that it's so volatile is actually a benefit in this case, because it means that the fund managers around the world only need to take a very small position to get the benefits. So this is something where I see there's going to be a tremendous amount of money going into anyone who's a fund manager around the world. We've already got Morgan Creek Capital doing a great job, already getting on board, you know, some major endowments through Stanford and MIT and Harvard, which is great. That's going to continue to grow. Now, that by having these fund managers diversify and getting results, we're going to see more money flowing into the ecosystem. It's going to increase the price. Any fund manager who is not exposed to this market, again, is going to be left behind. They're going to either lose their clients to the people who are getting involved, or they're going to get involved themselves. So this is going to drive an institutional FOMO that we have just not seen. So I think, yeah, that's, you know, pretty exciting.
Yeah.
The run up that we had in 2007 was 100% driven by retail investors. Institutions did not have the on-ramps to actually get on. So obviously there was a lot of FOMO there. It was very exciting. This is going to leave that for dead. So not only do we have the need for diversity within funds, we've got institutional FOMO, and we're also going to have a flight to safety because there's more money held in overseas tax havens in just holding US dollars than the entire hedge fund industry. And we have China and Russia teaming up to get rid of stop using the US dollar. We've got the Fed announcing that they're pretty much moving into infinite QE, So we know that the US dollar is just going to be falling by the wayside. It might perform okay against other currencies, but that's because they're all falling down together. You know, so that's the institutional side. The top end of town, there's a tremendous amount of money going in because of the funds diversifying, institutional FOMO, and flights to safety. But I'm actually more excited with what's happening at the bottom end of town. So in the third world, populations in the third world are moving from third to first world living standards at the fastest rate in human history. Uber fast, it's happening really, really fast. All of these people, well, basically none of them have a bank account. Okay? Most of them have a mobile phone. They're all going to be starting to use things like cryptocurrency, just because if you have a look at places like, we've already talked about Argentina, Peru, Venezuela, some of the countries in Africa, we're seeing record trading of Bitcoin volumes now. So already now, and in a lot of these countries, the price is already at an all-time high because their currency has been tanking so hard.
And this comes back to what we're seeing as a natural evolution of society and money as people flock from their essentially worthless currencies to the hardest alternative, and that is Bitcoin. What is harder than Bitcoin? I don't think there is anything.
Yeah,
it is
exactly
the hardest money, and this comes like we get into energy consumption of the Bitcoin network and how that contributes to hardness and hash rate and all that kind of stuff. So where do you, you've touched on how the institutional stuff is exciting. We've now got the on-ramps. How do you see Bitcoin adoption taking off in terms of more traditional investment products with self-managed super funds, with maybe 401ks in the US, pension funds in other parts of the world? How do you see that taking off, and how do you think the greater economic situation in the world, and in regards to bail-in, what's going to happen there? What do you think the crossover point is going to be? Do you think there's going to be a flight to Bitcoin because of growing risk in regards to bail-in? Or do you think people are going to wake up and these institutions are going to get into Bitcoin ahead of time before a global recession?
Yeah, well, we've probably got a few booms and busts ahead of us, but I think it's just going to be the idea of chasing the rabbit is the next one. We've already seen it before. Humans, human nature is human nature. It's going to be really exciting. But again, coming back to the third world and what's driving. In the first world, you're talking about exchange traded funds. So it's going to happen. It might get denied for another year or so until all the banks get their lines in together and build their own positions, right? But it's happening, right? There's no reason why it wouldn't. The reasons why they say, so they're saying, the last reason, so last week, was it the VanEck, whichever one it was that didn't actually get approved, they were citing reasons because there was market manipulation, right? Meanwhile, the top 4 banks in the States just got handed another multi-billion-dollar fine for insider trading.
Yeah.
All right? So they don't lose their license, they just get a slap on the wrist.
Yeah.
They pay a fine, which is literally, 1 or 2% of the money that they made anyway, and things get carried on. So it's a foregone conclusion, that's going to happen. But in regards to coming back to the third world there, most of these don't have bank accounts because the banks don't want to pay for the infrastructure because it costs a lot of money. But it's going to be worthwhile for the banks to build that infrastructure very soon because again, they're moving from third to first world living standards. But who's going to use a bank account? So you've got this entire population of people who use crypto, and then they said, the banks come, hey guys, we want you on board now, and what are they going to do? They're going to go, well, I've got to pay fees. I can only transact Monday to Friday, 9 to 5, and it takes 3 to 4 days to get my money. No thanks, I'll just keep using the money on my phone. Yeah, and so it's not going to happen. With the banks, they're just going to totally miss the boat. And it's going to be pretty exciting. And then we've also got the retail traders. So the rest of the world, the middle of the market. Well, every guy that chased the rabbit last time is pretty excited about jumping in again. And now all his friends know about it as well. Everyone will be getting calls out of the woodwork. I'm sure you got calls out, out of the woodwork when it goes nuts. So the retail FOMO that happened last time is only going to be bigger. And we have massive eating into the ecosystem on all sides of the market. A lot of what I like to do is having a look at history and seeing how things unfolded and the elements that made those things happen. And having a look at 2 places around the world that have really come out of nowhere in the last 50 years would be examples like Dubai and Singapore. So 50 years ago, Singapore was a swamp, Dubai was a desert, nothing. Obviously Dubai had oil, but so did Venezuela, and what have they done with that, right? So if we have a look at the elements that really made these powerhouses of economic activity thrive, it comes down to really two reasons. So number one is the respected property rights. So if you're going to do business in these areas, you know that you were backed by law, that no one was going to come and be able to steal stuff. So you could trust what was going on. Yeah. The second element was a low friction business environment. So you've got low regulation. You don't have to cut through all the red tape. You don't have super high taxes. So it's easy for people to actually do business. The beauty about cryptocurrencies is that it renders those two prerequisites irrelevant. They're infinity value already. So you can think of how successful Dubai and Singapore has been. Think about all these third world countries, and it'll be around the third world countries that do this because they won't have anything else in the way. The developed world will have regulation, it'll try and slow things down. There'll be nothing stopping what's going to be happening in the third world. So imagine in 10, 15, 20 years, we're going to have maybe, I don't know, imagine what it would be like if 1,000 new Singapores or Dubais were springing up with economic activity in these other areas. And they are all going to be using cryptocurrencies because the banking system is going to just miss the boat.
Well, a perfect example of that actually happening is, I have a couple of examples. One is Belarus. So the Belarusian president just floated in parliament the idea of building a nuclear power plant specifically for mining Bitcoin and creating a fintech industry around that.
Yeah.
The second is Paraguay is purchasing a lot of land for a mining farm based out of South Korea. Yeah. The government is purchasing the land for them to build that mining farm. So you're seeing these developing countries and these third world countries are the ones the most receptive to Bitcoin and crypto. It's not the first world, it's actually the third world countries that are saying, hey, look at this emerging industry, let's get in there, let's make the most of it, because this is like the second opportunity we have following what happened with the internet boom.
Exactly. And if you have a look at the costs that are required for them to get these operations up and running, the big one is energy. And a lot of these third world countries, well, where are they? They're around the equator. They're the places that have the most sunlight around the world, the most irradiance. And these countries are going to literally go from zero to hero in a very short period of time because they're going to have uber cheap electricity. And if they deploy it correctly by getting into the cryptocurrency space or whatever else, anything, they're going to be net exporters, and they're going to be forces to be reckoned with. And
that's actually what really excites me actually about the future of crypto, is starting to get into when states are going to be competing for hash power on Bitcoin, which I think is inevitable, and B, when Bitcoin's blockchain in the future will be used as a global reserve settlement layer, which I think is inevitable as well. And Bitcoin will be used as a major international reserve currency, because then major companies and corporations aren't losing millions in fees between exchange rates. So, I mean, it just, to me, so much of this makes sense as a natural evolution of where Bitcoin's going.
Absolutely. And there's actually an example of the global reserve currency, that beast taking hold in projects like Abra. So if you're unfamiliar with Abra, they were a remittance. They're working with remittances between the States and Philippines and the States and Mexico. But now, if you just use your phone, you can actually buy any of the main indices. So eventually you'll be able to buy any stock that's listed on any stock exchange using your phone. No ID, no nothing. You can trade from $5, which is cheaper than anywhere else in the world. And that is all done using smart contracts, which are collateralized by Bitcoin. So it is already using Bitcoin as a reserve currency, not reserve global currency yet, but it's a reserve currency for this massive population of people that are moving through the ranks and are going to be, the wealthy people moving forward, going from the third to the first world.
We're talking about collateral now. We've got products from Blockstream like Liquid that allow side chains where Bitcoin can be used as a collateralized peg for other assets. So I mean, this is where things are going.
It's ridiculously, yeah. I don't think it could be any more exciting. Yeah.
So Mike, what can people do if people want to get in touch with you? What facilities do you have available? And you've got a special deal for people as well.
Yes, sure. So you can head over to newbrightoncapital.com or click the link in the description below. So they'll take you to the site. It's pretty much got frequently asked questions and just the information that you need to know. But if you're unsure about anything, You can also book in a time, so you can book in a free consult. You get 20 minutes to have a chat with either myself or one of the team. We can walk you through anything that you're unsure about, and obviously it's up to you to decide if it's for you or not. But yeah, we'll be happy to have you on board. And new clients that come on board using your promo code, Bo, will get 1 month free. So that's $140 worth of value that you'll get just by using a promo code that will be there under Bo's link.
So how good is that? You get a month free, $140. If not, you just go and check it out. You can talk to the guys, learn a little bit more about what it means to have a self-managed super fund and what it means to own crypto assets in that fund as well. So Mike, just want to say a huge thanks to you for coming on the show.
Thanks, mate.
Really appreciate your knowledge. Super valuable, and we'll definitely have to get you back on the show one day, because people that have been around for that long, that understand the space in that level of detail, are hard to come by, and the knowledge is just too valuable. So thanks again, mate.
Great. Thanks for having me.
Cheers, guys.